Guys, this is Foresight Capital, and today I wanted to give a quick update on Palantir and where I think it's going to trade over the next week. So this was a relatively flat week considering the level of volatility that we had within the week. Last Friday, Palantir actually closed pretty close to $26.50 per share. We saw a bit of a run up into Monday as we continued filling in this wedge pattern that we had been talking about in previous videos. And when we completed the wedge, we actually sold off on Tuesday morning and found what seems to be a new support, which we'll talk about here in just a couple of moments. But the big news here is that we broke the long-term support that had been created by this red uptrend line, and it actually started back before this graph even has a scope of coverage. So basically since the end of October, if we extended this to the left and extended the chart to the left, you'd see that it's been a very long-term support line, and thus it's a pretty big deal that it was broken. We saw a sell-off almost immediately as we broke this support line and were again rejected by the 2770 resistance. And then we saw a bit of a spike into basically that same resistance level later on in the week. What was interesting about that spike is that Palantir did announce their very first live demo day for January 26, which is interestingly just before the Q4 earnings report, as it's now estimated that that will happen sometime in the beginning of February to the second week of February. So we should potentially see a rally of the stock price into that actual event. But this whole run-up happened before the event was announced because to my knowledge, the earliest news reportings of the event was actually after market close when we saw the price basically flatten out, leading me to believe that somebody was potentially tipped off and started buying Palantir early in the day, which led to a 5% increase. And then we saw a big sell-off on Friday, and the gap down is largely believed to be because Credit Suisse updated their price target from $13 per share to $17 per share, but reaffirmed that they think Palantir is still substantially overvalued, which we will also talk about in just a moment. So we ended up closing out the week at about $26 per share. I wanted to go ahead and draw out the Fibonacci pattern as well because this actually gives us an indication as to why we're potentially seeing some support level along this line. If we can see here the 38.2% retracement level, which is basically 38.2% recovery of the decline from 3350 all-time highs to the low of what I would consider this overall trend that we've seen over the past week and a half. We've had a 38.2% retracement of that decline, and we've been using this level now as support for quite some time. Now, if you're not familiar with the Fibonacci sequence, it basically shows psychological levels around which stocks and other patterns tend to happen, and they happen around the 38.2%, 50%, 61.8% levels. And so we can see that if this was the bottom of the decline and price that we saw, that the stock has been following the Fibonacci pattern pretty well as far as finding levels of support and resistance on top of the ones that we've drawn out, indicated here by the thicker red, yellow, and green lines. We're also finding secondary levels of support and resistance around these big price points. But the biggest two to pay attention to with the Fibonacci sequence is typically 38.2 and the inverse of that being 61.8%. So as I mentioned in videos throughout the week, I think that we're going to see a continuation of the overall setting lower highs within this trend and retest the $24.60 per share price point before we make another run at $27.67. That means that I'm personally not buying at this level, and we may not see that pullback. I could absolutely be wrong. We could use this as support, the 38.2% level, and make yet another run at $27.67. But my personal bets are on the fact that we're going to see a bit more of a pullback, and so I won't be adding to the position or managing the position at all until we follow through to that level. Once we see this, we have to reevaluate on how the stock looks, if there's been any sort of news or no news, which could cause the stock to trend all the way back to 2260. My personal bet and my personal trading strategy will be that we're not going to see a pullback to this level, but that we will see 2460 and possibly a small break below to the 2408, which is actually the 23.6% retracement of this overall decline. That would be an interesting price level because market makers could push it down that low to take out people's stop losses if they're trading around price points like 24.60, which have been used for some time as both support and resistance. So how I'm going to trade throughout the week is, again, not really manage the position at all unless we see a pullback to 24.60, in which case I'll reevaluate at that point to consider adding. And at that point, hoping for a reversal to start some buying volume back towards the 27.70 resistance, and then ideally a breakthrough of that and continuation up to what should be the next level of resistance, which is the bottom side of this long-term trend that we broke through this week. So that's kind of how I'm going to trade the first couple of days, not really add or sell until we reach the target of about 24.60 and then reevaluate the trade from there. So I wanted to pull up Lucid tracking because a lot of you have asked that I continue to update on ARKW's purchasing of Palantir. As we can see, they've been consistently buying Palantir for some time, but what's interesting about their buying operations this week is that they did buy 1.5 million, which is actually their third highest buying volume week behind the week that they added 16.2 million in basically a 1 million lump sum share purchase, and then $2 million back on the week of December 11th. But it's interesting to see here that they are allowing the weight of Palantir within the ARKW fund to remain below the 0.75%, which it seems they had propped up to multiple times. So they bought up to 0.75%. It sort of decreased as the price of Palantir decreased, and they bought more to bring it back up to 0.75%. And since then, Palantir has had another bit of a price decrease, and they're not buying as many shares to keep up that 0.75% weight. So I'm not sure if they're just kind of backing off on the purchase to see what happens and waiting for a larger dip to buy, if they're potentially changing the overall weight target of Palantir within the portfolio so that it's not as heavy of a weighted proportion of their overall portfolio, or what their overall plans are. But it is interesting to see that we're consistently seeing a decline in the overall weight of Palantir within the portfolio, and that they're not buying enough to bring it back up to what seemed to be, at least for a couple of weeks, the target area that they had for Palantir within the portfolio. And one last thing that I wanted to pull up here, I found an interesting graph from Kraft that shows some of Palantir's competitors. Some of them are publicly traded, some of them are not. But we've consistently heard analysts mention that Palantir is overvalued, and I can agree with that. For the longest time, Palantir has been a bit disconnected from fundamentals. As we can see, they've got about $742.6 million of revenue estimated from 2019. So this chart is a bit outdated, but we can see that some of their competitors have as high as $16.8 billion for 2019. And by the way, their revenue estimated in 2021 is just a shade over $1 billion, so still substantially behind some of the other industry competitors, one of those being Cognizant. And Cognizant in 2019 actually had $1.8 billion in realized profits, while Palantir had a $588.1 million loss. And we can see that on the revenue chart here of all of their competitors, they're basically the lowest at this $742.6 million revenue level, whereas we've got big companies like Cognizant up here at about $16.8 billion. But the market cap for Palantir among the industry competitors is actually the highest. In fact, we can see that some of the competitors, including Cognizant, are trading around the $40 billion per share range, or $40 billion total market cap range, and we've got Palantir trading at nearly a $50 billion market cap. So keep in mind, we've got a $588 million loss versus a $1.8 billion profit for these two companies, and the market cap is actually higher for Palantir. Now, one could argue that Palantir has substantially more room to grow and thus can warrant a higher valuation because they could grow into it. But keep in mind, Palantir has been around for many years. It's not like they just were formed as a firm and went IPO the very next year, or DPO. They've been around for quite some time, and so the comparisons with their peers are valid. And it's interesting to see that Cognizant has substantially higher revenue, substantially higher profits, and still a lower market cap. So that's one thing you have to watch out for to the downside. These analysts aren't entirely stupid. They are often wrong, just as retail traders are often wrong. Nobody is right consistently more than anybody else, with a select few investors kind of standing out among the crowd. But it's just important to remember that there is some downside risk with this stock because the valuation doesn't make sense. We look at technicals a lot on this channel, but you have to keep fundamentals in mind, at least in the back of your head, that if we do see some of these big sell-offs, potentially, yeah, a sell-off back to the $18 per share level could make sense because it would bring the market valuation more in line with maybe where it should be versus some of its competitors and where they're trading on the market. So just keep that in mind when you're entering positions. Never buy more than you can afford to lose. Never trade more than you can afford to lose, and always do your own research because there is potential with stocks that are this highly valued versus their revenue versus their profits to have a bit of a pullback, and you could get stuck holding the bag for a while. I'm still bullish on Palantir, but I'm not sizing up my positions, as you see, until we have dips because I don't want to get caught in the same trap that is always possible with stocks that are trading at what would seem this highly overvalued of a total market cap. So I hope that this video brought you some value, and if it did, don't forget to subscribe and give the video a thumbs up, and I will catch you in the next one.